You know, you might qualify for way more house right now, even if you live on tips or overtime or straight up vibes. No one's telling you how.
Yeah, didn't that bill just pass, Manley? I thought it was just political theater.
Oh no, my friend, it passed on July 4th. Trump literally signed it as America's birthday gift. Happy Independence Day from bad pre-approvals.
I mean, this bill changes the game. The income rules, the tax rules, the inventory. If you're waiting on your CPA to get the memo, you're going to be waiting a long time, dude.
I mean, you're right. Let's break it all down. Because if you understand this bill, you might unlock more buying power than you thought was possible.
Hopefully you like all the education that you're getting from Manley and I. Do us a favor and smash that like button, subscribe and follow, and tell all your friends and family about us.
Welcome to the Mortgage 101 podcast with Anthony and Manley. Welcome back to the Mortgage 101 podcast with Anthony and Manley, the show that helps you cut through the noise, understand the process, move forward with confidence in any market. Let's get into it. Welcome back to the Mortgage 101 podcast, where we translate policy into plain English and help you laugh through the madness of the housing market.
I'm Anthony, he's Manley, and today's episode is proudly sponsored by the letter B for Bill, buyers, bigger budgets, and hopefully not bad decisions.
The big, beautiful bill is no longer just political hype. It's the law now. And it's going to change everything from who qualifies to how homes get built. Let's get into this. It's real. It's the big, beautiful bill. It passed. It passed. I repeat, it passed. On July 4th, while you were lighting off fireworks, Congress was lighting up the tax code.
Yeah, Trump signed it like a birthday card to America. Instead of best wishes, it says, now you can write off your mortgage interest again. I mean, let's get into the talking points here. This bill officially passed and it was signed into law on July 4th, on America's birthday. There's no more waiting. This isn't a proposal. This is now policy. The ink is dry.
It's a sweeping update. The 2017 Tax Cuts and the Jobs Act, one of the most impactful housing-related tax moves in recent memory. We're not just revisiting tax rules, we're rewriting the playbook for buyers.
Yeah, and we're already seeing lenders, underwriters, and pre-approvals adjusting. This isn't theoretical now, Manley. This is already in motion. I'm seeing it.
Hey, don't wait for your CPA to give you the green light. By the time they do, the house you could afford might be off the market. Knowledge equals leverage, folks.
Yeah, I mean, we've been prepping buyers, at least myself, all week, who suddenly qualify for 50 to 100,000 more just because of this. I mean, this is completely changing the game, changing the metrics. We're now able to qualify because, let's face it, there's a lot of deep diving we got to get into this to really dissect it, unpack it, to figure out, okay, what changes are we going to see in the real world? How is this going to affect our buyers in actuality, not just on paper, but in reality?
It's just a game changer, my friend. It's just a game changer. Hey, breaking down what's inside. Let's hit the highlights because the bill isn't subtle. It's throwing fastballs at the housing market.
Yeah, first up, no more federal tax on tips and overtime. That's just not a one-liner. I mean, that's legit. I mean, it means if you're in the service industry or you're W-2'd, you just got way more mortgage friendly. I mean, that's the big aspect that we're seeing here. The fact that they no longer have to hide their income, it's a game changer, man.
I mean, Anthony, I just want to point something out to you because I was prepared for you to tell me this because we've been working on this, but mortgage commissions checks officially identify as tips. Thank you for your attention to this matter.
Income equality.
Income equality right there, my friend. I mean, it's going to be a game changer across the board for all these people and all these people that in the past we've had to struggle to gain income for all the things that they're not adding to their tax returns because they don't want to pay taxes on it. It's crazy. But
yeah, if we want to do a deep dive on the no tax on tips, it's basically saying the first $25,000 that you're making is tax free. All right. And if you're making $160,000 or less, you're going to be able to take advantage of that. I mean, that's big. If people can show an extra $25,000 without any tax ramifications, and most people in the tipping industry, they're not making $500,000 a year. So that
No.
160,000 is generous, in my opinion. A lot of people are going to be able to take advantage of this. This is going to be a game changer for a lot of people's bottom lines and their max purchase value.
No federal tax on tips for your bartenders, baristas, nurses, cops. All you guys are walking into the mortgage office with more qualifying income than ever before.
Yeah. And speaking of that, I mean, the big aspect that I'm looking at too is the SALT cap. All right. So it goes from 10,000 to 20,000, which gives some breathing room. And that SALT cap also allows like bigger, high net worth places like New York, California, Hawaii, to where there's a lot of property taxes. This SALT cap that's raising is now going to put more money into the U.S. and American consumer. Again, this is the gift that keeps on giving, and it's not just for low, moderate, or high income qualifications. I mean, people making 100,000 5 years ago, that was a lot of money, whereas 100,000, that's a drop in a bucket compared to today's living standards.
Hey, mortgage interest rate deduction is back in full force too. And that means you could be writing off a serious chunk of your interest, especially in the early years of your mortgage.
Yeah, and that goes for the builders too, right? It's a fresh funding start to encourage single-family construction aimed at directly fixing the inventory crisis that you and I have talked about on many, many episodes that we've been shouting about, saying, fix this inventory issue. We have an inventory crisis. And once these rates start going down, if these builders don't start building, it's going to get even more hot in the kitchen. This bill helps to adjust that to make it more feasible and economical for these builders to start building again.
Absolutely. Well said. Hey, and that ADU credit, that's a tax break for adding rentable space, whether it's in your basement unit or a spruced up shed. That she shed looking a little nicer than it was before because we're going to have our in-laws moving in there. We might have somebody moving in and put in a bathroom and boom, it's a guest house and a tax write-off.
Yeah, I mean, shoot, your garage might qualify for a tax credit. Add a bathroom to that bad boy and bam, you got yourself a tax write-off.
You bet.
I mean, and speaking about the SALT cap rising, especially for the first time, the people in New Jersey, this is the first time they smiled during tax season because let's face it, that's a higher cost area. These higher cost areas where people are just drowning in bureaucracy, this gives them kind of a fresh start and a life vest to go, hey, I can actually breathe here. So there's going to be a lot of changes for these buyers in the coming future. That is 100% sure.
I didn't think those people in New Jersey ever smiled, to tell you the truth. But hey, that's just me because I'm from Wisconsin.
Hey, forget about it.
Hey, forget about it. Oh, geez. Hey, what does this mean for buyers today? Here's what you care about. Can you afford more house now? The answer might be yes, and here's why.
Yeah, I mean, I ran into that scenario. Actually, this morning, I had a bartender. He jumped almost 100,000 in purchase power, all because his tips finally count and his tax liability dropped. I mean, that's facts.
That's powerful stuff right there, Anthony. Tip income and overtime are now treated like VIP guests at the underwriting table. No more fuzzy math, clearly and fully. It's awesome.
Yeah, man. I mean, your DTI, for the viewers out there, that's debt to income ratio. That determines how much home you can afford. That just improved overnight because of the lower federal tax. That's a massive help for people who are trying to squeeze as much buying power as possible with as little tax ramifications as possible. Now you can make your cake and eat it too, which is what we want.
Yep. Hey, if you live in that high-cost metro area, the expanded SALT deduction could mean hundreds back in your pocket monthly, which directly boosts your affordability, gives you a better opportunity for a better home.
Yeah, I mean, that interest deduction is like having silent partner paying part of your monthly cost. It's like that revenue stream that you've been needing. It makes stretching to a better home more financially stable, especially sustainable. I mean, if you can do an ADU, an additional dwelling unit that can offset that higher cost, that's what we've been looking for, right? This is real boots on ground solutions that are going to make home ownership more affordable for the homeowners right now.
Hey, Anthony, it's wild. These aren't just government handouts. These aren't just one-time grants. These are structural shifts that could change how you qualify forever. This isn't a handout. All right, Anthony. It's the ever-popular rate prediction tracker time. We're going to find out how far we are on our math, though so far this year, remembering that we're looking at a rate prediction tracker for rates at the end of the year and what we've been predicting all along the way since January 1. So let's check in with the Mortgage Rate 101 prediction tracker.
Yeah, man, our forecast range is still 5.8 to 6.5. The average target is 6.15. This week's actual rate jumped up to 6.75. This is the fifth straight day we saw rates increase. There's a lot of volatility and uncertainty right now in the news headlines, and it's not looking good for the Feds, to jump off that rates higher for longer. I mean, we are not giving them an incentive to drop these rates. We're just not. It's really interesting the what we're seeing with how the jobs report is coming in bullish. The unemployment rate is coming in at all-time low. American spending is an all-time high. Inflation is ticking up higher. It's like right when we start going in the right direction, we start backtailing, and that's exactly what we're seeing now. And this is the fifth straight day we opened up our mortgage-backed security tracker, and we're going, this is not a week of forward projected. So, yeah.
I mean, what a different tune from last week, right before the holiday, we were talking about all the optimism of rates are going to continue down. And then we have all this weirdness happens, this volatility that happens this week. And again, there's nothing that's monumental. I mean, these numbers that you're talking about aren't massive shifts, but they're shifts enough to make the market react and shudder to it. So we're sitting here. The short-term optimism could dip rates slightly, but this bill adds over $3 trillion to the deficit, and it could fuel inflation and push rates up longer term.
Yeah, I mean, you said T as in trillion, not M as in million.
I did say T.
Or B as in billion, T as in trillion. So yes, it's adding to it, right? Which, you saw Musk basically want to start a third party because he's like, these mother lovers are adding to the deficit, and they say one thing and they do the other. It's like, yeah, if you want to make these changes, there's going to be a cost to it. And so we're seeing a lot of interesting stuff. I mean, we're already seeing a spike in buyer interest. Lenders may keep rates sharp just to stay competitive. This is the unknown zone, because once we start seeing this momentum, do they really want to peel off of that? That's the question. But if anything, the consumer, the viewer, can come away with this, that right now, the definition of transitory is in full effect, because everything that's going on right now is transitory. It's not organic. The tariffs, the inflation, the jobs, it's all a moving target. And, the Feds don't want to do what they did in the 80s, which was, too quickly come up with, hey, inflation's in check, then let's drop these rates down, because they did that in the 80s and they had a boomerang effect. And then it immediately did the opposite. And they were in a worse off situation than they were when they started the rate decreases. So I think that's what's going on now, is they're just like, we want to see some traction. We want to see some consistency. We don't want to see a month or two of rates and these metrics being in line. They want to see a longer runway, so that way when they do make these long-term changes that are going to be 24, 36, 60 months, they want to make sure that what they're doing is based off a sound, movement, not stuff that's going to change on the dime like we're currently seeing.
I think those boys over at the Fed right now are saying, hey guys, don't get too comfy. A $3 trillion bill means more federal borrowing, which adds to inflation risk. It's a silent killer, and it could be down the line.
Yeah, I mean, we could see a short window, right? A few sweet months where rates dip temporarily, like we were seeing, while all this shakes out. But if you miss the boat, you may regret it, meaning, hey, like, I'm getting comfortable with these rates going down. I'm just going to keep riding that boat. And then in 90 days, they wake up and go, well, we just took 2 steps backwards. And so, I just lost a lot of that momentum. I thought I was going to wake up and see the same momentum I've saw the last 90 days. And that's just not how the market works, right? It comes in waves, 2 steps forward, 1 step back, 2 steps back, 1 step forward. You want to catch that curve in the right way. That's where you and I come in to say, this is looking good. You're trying to save nickels, and you may have to push in dimes to do that. It's not going to make economic sense.
I think a true surfer knows how to ride that wave correctly. That's all I'll have to say about that. That's for my friends out there in Hawaii that are surfing every day that I know. I mean, I've seen the pictures.
Yeah,
Bottom
you want
line,
to hang 5, you don't want to hang 10. But if you hang 10, you could barrel roll into the reef.
ouchie, ouchie, ouchie. Bottom line, if you see something you like, lock it up. Waiting for the perfect rarely pays off in this kind of market. It's so volatile. Don't just sit there, deer in the headlights. We've talked about this over and over again. Please don't make me bring that picture up again with the deer standing in the middle of the road, just about to get whacked. Just, make a decision. Don't worry about it. This is ever changing.
Yeah, buy now, refinance later, might become buy now, thank yourself later. And that's where I truly see it headed.
I'm with you, buddy. If you guys are liking all the information you're getting from us, if you're feeling that we're educating you, please smash that like button, subscribe, DM us with any thoughts or ideas for our show, and also tell your friends and family about it. Share us on social if you can. Would love it. Hey, Anthony, guess what time it is? It's Rapid Fire Buzzwords with Ryan Brasfield. Hey, let's hear what you're going to do here, Ryan. Tell us what's going on.
Yep, so we're going to be running through a few buzzwords here. You guys are going to let me know what you think on it. 1 to 2 word reactions. I know that's never how this goes, so we're going to get right into it. Make as good as time as we can. The first term for today is overtime pay.
Oh, goodness. That's where you work more than 40 hours a week. You might get that extra 10 hours because your boss is mean. And guess what? We don't have to count that, and that you've been hiding some of that or working on that differently as you've done in the past. Now we get to count it, my friends. We get to count it.
Yeah, I mean they're looking at 12,500 is the cap. I mean that makes sense, right? I mean if you're making over $12,000 in overtime and usually getting taxed on it, and you're in a in a high income bracket, 100,000, 120, 150,000. I mean that's a pretty penny, right? That's going to save you some time, and it's going to give you incentivization, if that's even a word, to work overtime, right? I love the mantra, which is incentivizing work, and right. And so I think everyone can agree that that's how America was built. You cannot talk to an American and see that they don't know what hard work is. And it doesn't matter which aisle you're on. It doesn't matter if you're red or you're blue, you're Republican, you're Democrat. All of them work hard. And so I think everyone can agree if they can keep more of their pay and less out of Uncle Sam's hands, I mean, that's a win for everyone.
1,000%, 1,000%.
All right, our second term is a big one because of the triple B. That is tip income.
The
Tip
big, beautiful
income,
bill.
man.
Big, beautiful
and it's
bill.
funny because like I said, I want income equality. I identify as a tipped employee. And so I don't know how well that's going to work with my CPA. I don't know if he's going to be like, Anthony, I know you identify as a tipped employee, but the government doesn't look at it that way. So yeah, maybe
we got to try, though. We got to try.
Right? We won't be able to benefit. But tipped income, the customer service industry, it's going to, Vegas is probably going off the rails right now because most of their economy is based off of tipped income. Now it's going to be, just think about what this is going to do. It's going to take it out of the government spending and put it into the American spending. So not only is it going to keep more money, into the coffers of the American people, but they're going to have more money to inject into the GDP. So now there's going to be more spending. And remember, one person's spending is another person's income. So the more spending there is, the more income is. So as people's income raise, that's going to be a byproduct of other people's spending, which is going to be more income raised. So it's a win-win, in my opinion, for everyone.
Nicely said. I'm not even going to try to top that other than it's the circle of life within the way money moves from one person to another.
Let's
hold up, Simba. Oh.
All right, our third term for today is something I'm not very familiar with. Can you tell me more about the salt cap?
Oh, Anthony's all over this. He puts a lot of salt on his food. I've been with him.
I mean, it's you want me to take this? I'll take this. So
yeah, you take that.
Okay. So the salt cap is basically local and state taxes that you can deduct on your income tax. You can subtract certain things, and that cap was 10,000, And now with other areas, it's upwards of 40,000. So you have more deductions and you keep more of the income tax that was allocated to you. So this runway is the next 4 years. This is great. This means that we're going to have more deductions, more power to be able to keep the money in the consumer's pockets and less going out to the federal government.
So you just keep saying this over and over again. And if I'm hearing you right, we're going to pay less taxes. Is that what we're really trying to say here? The BBB is really
we're paying
for
less
taxes.
taxes. It's the cap. You know, that cap was now released and it was increased. So now we have more itemized deductions that we can do, which means more tax shelter for the American people.
Love it. Love it. Love it.
And if you guys don't know, SALT stands for state and local tax. SALT, state and local tax.
It's not the white stuff you put on your French fries?
No, that is that's sugar if it's McDonald's, because sugar is like addictive to everything. So they put that white stuff on everything.
All right, up next is ADUs. Tell me more about ADUs.
Well. That means we can add an additional dwelling unit, correct, Anthony? We get to add on that little she shed like we talked about before. We could have Granny living in there. We can put a bathroom in that thing. We could put a little kitchenette in that thing. And we could be charging Granny rent. And guess what? We got a really nice tax deduction. Again, tax deductions.
Yeah, I mean, it's the big, beautiful bill. I mean, it's kind of an obnoxious name, right? It's like, who names a bill Big, Beautiful Bill? Of course, Trump does.
We know who would do that. We know exactly who would do that.
But it's funny because if it was like Bill 76543, it'd be like the rest of the bills. And then is that going to be headline worthy? Bill 657534 just passed. No, let's make it the big, beautiful bill.
Hey, but how about the marketing of actually signing this on the 4th of July and giving us this birthday present? I mean, how can we just not like point that out and go, this guy's an absolute genius? First off, what are these guys doing on fireworks day? We're going to blow some stuff up. Well, he just blew up a whole bunch of stuff. Yeah, baby. They're blowing up tax deductions all over the place. We're making this freaking rock for the American public. I mean, how can you not be happy about this? I mean, left or right side of the aisle, how can you not be happy about this?
No, and that's the thing, right? And sometimes it's, like he had B-2 bombers, go across as he was signing. And people didn't know the significance of it. And he said, I'm blowing up the IRS's bottom line. That's what he said. And it's like, it makes sense. It's like you're signing a bill with B-2 bombers going around that basically obliterates the IRS's bottom line, meaning they can't spend as much. So unfortunately, the auditors of the IRS are going to have to make do with lesser pay increases, lesser bonuses. And I know, the American people are just so distraught over that. I know they wish that they could keep the auditors in the IRS happy and fulfilled with bonuses and payment increases. But unfortunately, with this big, beautiful bill, that's not going to happen.
Next.
All right. Yep. Up next on our list is interest deduction.
Ooh.
I'll take this. This is perfect. I mean, this is the epitome. If you look at the definition of debt equals income and income equals debt, it's interest deduction. Because when you make income, you create income tax. When you create a debt position, you create interest deduction. Because what is the interest deduction? It's a way to deduct interest on the debt so you pay less interest, or you write it off to counteract the income that you're making. That's why interest deduction is the key word for the big players, because if they're making $1 million in income, they want to try to find $1 million in interest deduction. So they pay Uncle Sam nothing, and they keep that debt and they keep that interest deduction running like a fine-tuned machine. Interest deduction is a sleeper word. A lot of people don't know interest deduction. That's massive. I mean, the more interest that you can deduct from your bottom line from a debt, then the more you are sheltered from taxes. And let's face it, our W-2 viewers out there, they understand that they can't hide from the tax guy. They have to show everything because it gets taken out before it even gets in their bank account. Whereas if it's self-employed, if you're a small business or you're LLC or a DBA even, if you're a S corp or C corp, you have interest deduction metrics and levers to use to your advantage. Whereas this is now allowing W-2 wage earners, which is a majority of the population, to have a seat at the table to say, I'm tired of all the other people having fun, all the billionaires and millionaires who are self-employed. Now the hardworking American people can have a seat at that table to go, I want a part of that interest deduction. I want a part of that cap. I want a part of that, avoidance of taxes. They now have a seat thanks to this big, beautiful bill.
Everything you said, this is just a playing field leveler. Interest deduction is just leveling the playing field for the people versus the self-employed versus W-2'd. Some giving them opportunity that they didn't have before. And, love it or hate it,
Yeah, no,
I think
and I
good all the
actually
way
had a
around.
conversation with one of my clients this morning, and she didn't even realize how this affected her. She worked in a local hotel here, and she said, "Oh, it's going to help the hotel owners. Ain't helping me with this big stupid bill." And I said, "So and so, do you make tips?" She's like, "Yeah, I live on tips. That's me." And I was like, "Okay." I said, "You do know that you went up about $180,000 in purchase power because of this bill?" And she was like, "Well, how?" I'm like, "Because now you're able to show more tips that you were not making because, tax reasons. You can now show that. That is giving you a seat at the table that you did not have. That's nothing bad about that." And she was like, "Oh, I didn't realize it affected me." I was like, "Yeah, if you're making under 160,000 a year, you're going to be able to show 25,000 tax free without any loan level adjustments." She was just blown away. She was like, "Are you serious?" I'm like, "Google it if you don't believe me." And she did. And she texted me later on and goes, "Oh my gosh, I fall within the big, beautiful bill." I was like, "Yeah, you do." And so she was like, "But I still don't like him." I was like, "You don't have to like him, but we're
don't have
talking
to
about
like
your
the guy."
livelihood here. And it affects you." And she goes, "I guess it does affect me. I'm still not going to say it affects me, but it does." And I was like, "No problem. But I'm just letting you know."
Yep. You don't have to like the guy, but there is some method to his madness. That's all I'll say.
Hopefully you like all the education that you're getting from Manley and I. Do us a favor and smash that like button, subscribe and follow, and tell all your friends and family about us.
Anyway, moving on.
Yep. Last term of the day, another term I'm sure Americans have been hearing a lot of recently, and that is a $3 trillion deficit.
Well, oops. That's why there's madness to this. Everybody's shaking in their boots going, $3 trillion with a T in the deficit. $3 trillion. How are we going to work our ways out of this? Yet to be determined. Am I panicked about it? Absolutely not. He's got a plan. We're going to work ourselves through this. All this beautiful opportunity for Americans to keep money in their pocket and spend it out in the real world. It's going to make a really good opportunity for everybody to really add back to the deficit that way.
Yeah, and here's the thing. It's like, if we're going to add to the deficit, we might as well make it count. And far too long, we've been raising this debt ceiling and adding to the deficit, and it doesn't help the American people. It helps hedge funds, helps Wall Street, helps big banks, helps everyone who doesn't need help. So yes, we're adding 3 trillion deficit, but when you look at the metrics of what it's affecting, it's the American people this time. Now it's going back in the pockets of the American people, which is going to help the overall, GDP. It's going to help the economy. It is now going in the right direction. Now, I'm a big proponent on we have to start cutting, but I'm liking the direction that we're going. At least, we're now spending to help the American consumer and the American person, and not the engines and the machines that are behind, these conglomerates or these top 100 companies that have been taking advantage of agenda-driven, policy up until now. So I think this is good. I think this is a good start. Now, do we need to start, going the reverse direction? Yes. But is this deficit going to the right, pond? 100%.
Simply put, he invested back in the American people. He's giving them an opportunity here where a lot of times these things have not been a true investment in the American people. I'll just leave it at that. Hey, guess what that does? It takes us to your favorite segment. Don't be dumb. And this is very similar to what you were talking about your phone call, but client comes to me and says, hey, I don't file my tips. It's off the book. I don't trust the IRS.
Yeah. What did you say?
And I said, cool. You always won't trust the underwriting system, but when it tells you qualify for a cardboard box, you're on your own.
So what's the lesson?
Oh, you can't expect to buy a home with cash under the table income. And if it's not on your W-2 or tax return, the underwriter doesn't care.
Okay. So you're basically saying that they don't want to show it. And so that was our opportunity to educate the buyer going, unfortunately, I know that you made $50,000 in tips, but because you only showed $5,000, you're only showing $5,000. We can't say that anymore because now with this big, beautiful bill, they can show their tips. And more importantly, that tip compliance, we probably need to let them know that you don't have to be afraid of showing it anymore because it's not going to have any adverse effects like it did, before. And so we have to re-educate them, right? We have to re-educate them. Don't be dumb moment is don't do the same thing over and over and expect a different result. You have to change your mindset in order to change the outcome. And that's a perfect example. Don't be dumb. Let's change the script.
Mind shift. We got to have that old mind shift. We've talked about it a lot on a lot of different things, but now that OT tips aren't taxed, there's literally zero reason not to report. It's not hurting you anymore. It's helping you qualify. And that's what we're about, trying to get you to qualify for that big, beautiful home.
Yeah, this is a moment of reflection to say, hey, let's take this time. Let's clean up our docs. Let's show the income. Let's take full advantage of the system fully working for the people, which is what we've wanted. It's unreal. The fact that we have someone in an office of influence to be able to recognize something that is so impactful for most of American people, which is how can we show as much money on paper as possible to be able to gain, collateralized debt to be able to grow our portfolio without being smashed over the head in income tax. And, it makes sense because if someone making $150,000 a year is getting smashed over the head by making $25,000 in tips, they shouldn't be incentivized to hide it. They should be incentivized to work harder, work smarter, and show the fruits of their labor. And that's what this bill is doing with taxes and overtime.
It's power to the people, my friend. Power to the people.
For sure.
Oh, love it. Well, closing thoughts, motivation. Look, this bill might not have been marketed perfectly. We saw the shenanigans that have been going around, but the opportunity it creates is just unmistakably massive for the American public.
Yeah. I mean, if you think you don't qualify, think again. If you thought you couldn't afford a home, double check. This bill just rewrote the numbers. It's a complete game changer. And it definitely, it's giving a go to get another look. If you were looking to buy a house, even 3 months ago, 2 months ago, a month ago, 2 weeks ago, before January 4th and, or January 4th, July 4th, January 4th. If you were looking to, buy a
over
home
here, pal.
Before July 4th, make sure you reevaluate your situation because it completely changed with this bill. And so you may have been, I can't, my buying power is not there. It's probably there now. It's probably there to get you where you need and to get the house you want, and you don't have to settle and wait. So definitely get a second opinion. That's my motivation to the viewers out there.
If you're a mortgage loan officer professional like Anthony and myself isn't reaching out to you and saying, hey, we were a little borderline the last couple times we talked. Let's look at this now and see what's going to happen and see what we can make sure happens for you in the future by, making sure you're taking care of your tips correctly and reporting them correctly now that you have this sort of shield, so to speak, against the taxation of those tips. But hey,
Yeah, and I just sent out an email to all my current clients, and I labeled it, "Be sure to do your BBBA." And I said, for those of you who don't know what BBBA stands for, it's the Big Beautiful Bill Audit and how it affected your approval, because it changed for the better. And I've been taking calls all week, and it's just the gift that keeps on giving. Hey, you got 150,000 more to play with. Hey, you have other options. Hey, this looks much better in your situation. So definitely make sure you guys are doing the BBBA if you're actively searching.
love it, love it, love it. Hey, hope is powerful, but preparation turns possibility into progress. So let's keep her moving. Hey guys, DM us if you have any questions. Share this with someone who needs to know if they qualify.
More importantly, like, follow, subscribe. Better yet, smash that like button. And if you or an agent haven't mentioned this bill yet, send them this podcast. Make sure they understand how the Big Beautiful Bill affects their business, affects their clients, and affects their future.
Hey folks, we'll see you next time on the Mortgage 101 podcast. Remember, the Big Beautiful Bill didn't just pass, it might have just handed you the keys. If this episode helped you feel more confident about your home buying journey, do us a favor. Share it with a friend, subscribe, leave a review, and if you've got a question or a topic you want us to cover, hit us up with a DM or a comment. Thanks for listening to the Mortgage 101 podcast. We'll see you next time.
Knock, knock.
What? No, not
Knock, knock, bro.
folks. Oh,
Knock,
no.
knock.
Every time we think we've hit rock bottom, come on.
Knock, knock, bro.
Lord almighty, who's there?
Locked.
Locked who?
Locked and loaded with a 6.25 rate, and I still feel broke.
God. Sounds like you need more therapy and a rate buy down.
Facts.